After a knee-jerk reaction where the rupee hit a two-week close at 62.47, you have seen some recovery coming in on the closing basis. The dealers believe that the impact of $10 billion a month tapering by Fed was largely priced in. So the closing, of course, on your screens, very flat there. Let's also get in Upasana Bhardwaj. She's economist and USA Bank, and she joins us live for this leg of the show. Upasana, hi, welcome. First of all, are you surprised by the quantum or the timing of the Fed tapering, and what is the kind of impact that you perhaps expected on the rupee?
Not really, Manisha. We were expecting some kind of an announcement, at least the guidance to be very clear in terms of tapering. And we were somewhere expecting a 5 and a 5 billion scale back in terms of MBS as well as treasury purchases. That's really not a surprise, I would say. But yes, what we were expecting was to see a little bit more adverse reaction in the markets, which has not really come through. So I think that is a pleasant surprise. The reason why I would attribute this kind of a reaction by the markets is because the Fed has fairly balanced its action by the forward guidance being fairly dovish. I believe the markets were somewhere expecting whenever the announcement would come, it would be on a regular basis. If it was to be a 10 billion purchase, 10 billion of tapering, then it would come on a regular basis. That's not something which the Fed has announced. The Fed has announced a one-off tapering by 10 billion and has made it data dependent going forward. So there is a likelihood of skipping a meeting or two without any tapering being announced, and then subsequently again tapering. So that kind of a gap, I believe, has proved to be slightly positive for markets.
Clear point. Upasana, what's your sense now? Because would you say that the Fed tapering news has now been done and dealt with, and perhaps the rupee would not react in January yet again when the tapering actually starts?
No, I think we would still see some kind of a reaction once the tapering begins, because one is the announcement effect and one is the actual action having taken place. So we will definitely see some kind of a adverse reaction, but I do not see that to sustain for too long, because definitely markets have understood the difference between a tapering, a gradual tapering and a tightening, and that difference will keep the sentiments more in favor of risk appetite.
So Upasana, while this is the second straight year of decline for the rupee, we still are down 11% for 2013. What's your sense for 2014? Is it going to be in the range that we saw in 2013, or do you see that breaking?
No, I would expect a more narrower range or less volatile rupee next year. But definitely, I think as we approach the end of 2014, we could possibly be moving towards the likelihood of other developed market central banks moving towards tightening, and that could add to extreme volatility in terms of rupee. But even before that, I think end of next quarter and beginning of the fiscal year, Indian fiscal year, we have the political scenario, uncertainty over that front. Once that is taken care of, we should see some stability within the INR come in.
Vijay, getting you in the conversation as well. I mean, we have seen a very volatile day today, but the closing has been positive. What does that tell you on charts?
Manisha, I think the markets have put up a very brave front by shrugging off the $10 billion of tapering. But any kind of liquidity curve in the market is likely to impact the easy money expectation, and therefore the complacency that inflows will continue at the same pace as they were earlier. So my guess is the announcement has basically ruffled a few feathers, created small ripples. But as and when the event actually takes place, there is likely to be another round of reaction to it. And I would maintain my view that 60.80 in the spot segment will remain the maximum potential for the rupee to appreciate, give or take 20 paise here and there. And the possibility of 63 to 63 and a quarter should not be ruled out.
Upasana, what's your sense really coming in from, the tapering yet again? While Bernanke said that it would be in measured tones, does that tell you that there would be less surprises? Because once we've started on that course, it more or less would happen. But the surprise element, since that is out, the markets perhaps will cope better.
No, like I said, in January we would definitely see some adverse reaction happen because of the actual tapering begin. And after that, it will be more a function of how data is evolving in the US. So there I would expect a gradual tapering to continue with the 5 to 10 billion. So it would differ across meetings. It would be ranging between 5 to 10 billion over a period of time. So markets would gradually get used to it. But yes, to begin with, the actual tapering, once it begins, we would see a reaction in the markets.
Also, what's your sense about the domestic factors now? Would you also say that perhaps a spike could come in because of the Indian elections? Also, the economy, while we still are talking about iron ore, coal reforms, we also are looking at the gold import curbs that could perhaps also be, faded out as we go ahead into 2014. How will all of that structure on where the rupee goes?
Definitely the current account deficit numbers would show, the increase in gold imports which will result because of removal of these curbs will reflect in the higher current account deficit numbers. But to an extent, the higher gold imports will get offset by hopefully higher exports on iron ore front, given the removal of bans by the bans on mining iron ore by the Supreme Court earlier. So to an extent it may be offset, but nevertheless I expect a higher current account deficit number going into FY15.
Vijay, how would you look at the dollar index at this point in time? Because we saw a 0.5% gain up for that. It's trading at a 2-week highs even at this point in time. Do you think the Fed tapering, the high equity markets and the sense that the US economic data finally is perhaps on track would give more leg up for that?
I would think so, yes, Manisha. I think the dollar index might have some more headroom on the upsides. And 80.85 is a level that I'm watching very keenly. I'll take a fresh view when that level comes in. And at this point in time, 80.15 is a support on the USD index.
Okay, so those are the levels to watch out for in the currency. The tapering knee-jerk reaction, of course, has been absorbed by the market at this point in time and then done and dealt with. As, of course, Upasana was saying, Jan would be a new month to watch out for. But with that, Upasana and Vijay, thank you so much for joining us and giving us your sense on the currency space.